The stock dropped 6% after earnings. The revenue number actually beat, the EPS beat, and yet 6% down. If you only read the headline numbers, you missed what the market actually reacted to. The real signal was buried inside the earnings, called transcript, in the language management used, the questions they avoided, and the tone that shifted quarter over quarter. Today I'm going to show you how to use AI to read an earnings, called transcript, the way a professional analyst does. 3 prompts, 30 minutes, a level of insight that used to take a whole research team. Every public company holds an earnings call after it reports results. Management presents the numbers, but more importantly, they explain what's driving them. Then analysts from investment banks ask questions. The transcript captures all of it, word for word. And here's what most retail investors don't realize. The transcript almost always contains more useful information than the press release. Executives choose their words carefully. When growth is slowing, they don't say growth is slowing. They say things like we're prioritizing quality over volume, or the macro environment remains dynamic. AI is exceptionally good at detecting this kind of language. Before we get to the prompts, you need the transcript. Here's how to get one for free. First option, the company's own investor relations page. Go to the company website, find investor relations, and look for earnings or events. Most companies post transcripts within 24 to 48 hours. Second option, the Motley Fool publishes free transcripts at fool.com/earnings called transcripts. Search the company name and the quarter. Third option, Seeking Alpha has a free transcript section under the earnings tab on any stock page. Once you have the transcript, paste it into your AI tool of choice, Claude, Chat, GPT, Gemini. These are long documents, so make sure you're using a model with a large context window. Now we're ready. Prompt 1. Paste in the full transcript and ask this. Summarize what management said about each major business segment. For each segment, note what drove performance this quarter, what management flagged as a risk or opportunity going forward, and any change in tone compared to what you'd expect from a company hitting its numbers. This gives you the business narrative in plain language, no jargon, no spin. What you're looking for are the strong segments actually growing or just holding? Are risks being framed as temporary, supply chain headwinds, one-time items, or is there a structural shift management is trying to soften? The AI will pull out patterns across hundreds of lines of transcript in seconds. Prompt 2 is where it gets interesting. Ask the AI this. Analyze the language management used throughout this transcript. Identify phrases that signal high confidence versus phrases that are vague, hedged, or non-committal. Flag any areas where management deflected questions or gave answers that didn't directly address what was asked. Confident language sounds like, we expect margins to expand by 200 basis points. Hedging language sounds like, we remain cautiously optimistic about the trajectory of our margin profile. Same topic, completely different signal. When an executive who normally gives specific numbers suddenly goes vague, that's worth noting. AI will surface this in seconds. A human reader often misses it entirely because they're reading linearly and the hedge is buried on page 12. Prompt 3 is the most powerful. Ask. Review the analyst Q&A section. For each analyst question, summarize what was asked and what was actually answered. Flag any questions where management gave a non-answer, changed the subject, or gave a significantly shorter response than usual. Analysts on these calls are smart. They ask pointed questions, and sometimes management simply doesn't answer them directly. A classic example, an analyst asks about customer churn. The CFO responds by talking about gross margin improvement. That pivot is meaningful. What management avoids telling you is often as important as what they say. This prompt turns the Q&A into a map of where the bodies might be buried. Here's a bonus move that separates good analysis from great analysis. Once you've run the three core prompts, pull up last quarter's transcript and ask the AI. Compare the language and tone of these two transcripts. What changed? Where did management become more cautious? Where did confidence increase? Are there topics that were discussed last quarter that weren't mentioned this time? Drift in language is one of the most reliable early warning signals in investing. A CEO who talked extensively about market expansion last quarter and says almost nothing about it this quarter, that's a flag worth investigating. Two transcripts, one comparison prompt. The AI does the heavy lifting. Let me show you how this flows in practice. You pull the transcript. You run prompt 1, the business narrative, and get a clean segment by segment breakdown. You spot that the fastest growing segment is showing slower growth, but management is calling it healthy normalization. You run prompt 2, the language analysis, and the AI flags that forward guidance language shifted from specific to general. 3 quarters ago, we expect 18% revenue growth this quarter. We're well positioned for continued growth. You run prompt 3, the Q&A audit, and find that 2 analyst questions about pricing pressure got deflected with answers about product roadmap. Now you have a thesis. Not a trade, a thesis, something to investigate further. A few honest limitations before you run with this. First, AI doesn't know the company's history the way a dedicated analyst does. It can only work with what you give it. The more context you provide, past transcripts, analyst estimates, key metrics, the better the output. Second, language analysis is probabilistic, not definitive. Hedging language can mean a cautious management team. Not necessarily bad news. You need to combine this with the numbers. Third, these prompts work best on detailed transcripts. Some smaller companies have short, low-quality calls. The signal-to-noise ratio drops significantly. Use this as a research accelerator, not a research replacement. The goal is better questions, not automatic answers. Earnings calls happen every quarter. Most investors skip the transcript entirely and just react to the headline number. You now have a systematic way to go deeper in 30 minutes with tools that are free to use. Your homework: find the most recent earnings call transcript for a company you own or are watching. Run all 3 prompts. See what you find. If something surprises you, a deflected question, a shift in tone, a risk that wasn't there last quarter, that's where your research should go next. Next episode, we're going to look at how AI can help you read a company's annual report, the 10K, and pull out the risks, red flags, and strategy shifts that most investors never see. See you Thursday.